All righty, everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach and senior manager with Charles Schwab, and today is Trading a Smaller Account. So I have been away for a week, and then we had Martin Luther King Day, and so we are finally back and getting in the groove. Today is going to be brought to you by the numbers 4, 5, and 6, because before I left, we had placed 4 trades on we had placed trades on 4 stocks, 5 trades, and I have at least 6 example stocks that I want to look at today. So 4, 5, and 6, keep that in mind. And what are we really looking at today? Well, we're going to look at stocks that are uptrending in an uptrending market. We're going to look at ways that we can place example trades for short-term trades. The last event that I did in Miami, Kevin Hinks joined us, and one of his expressions is, "I'm in the moving business, not the storage business," meaning he's looking at short-term trades with respect to the markets, not long-term love affairs. And so, our focus so far this year has been shorter-term trading strategies. We're trying not to be greedy, and just get in and make a little bit and get out, and make a little bit and get out. And so we're going to continue with that trend. We're going to use a couple of different strategies today. Some use stocks, some use options. So that's what's on the menu for today. So just let me bring up my slide deck here. Okay, there we go. Sorry, guys. I just I added something at the last second here. There we go. Okay, so before we, get into the thick of things, I just want to remind everyone that everything that we do here is for general information purposes, for educational purposes. So, keep that in mind. We're going to place a lot of example trades. We do in this class. It is a very active trading class. We do use both options and stocks, but know that options carry a high level of risk and aren't suitable for all investors. So it's important that we manage that risk. We use the Paper Money software application on the thinkorswim desktop platform. And it's important to know that with Paper Money, we're using the Paper Money platform, that short options will never be assigned early. So that's something we discuss, but we don't get to see examples in Paper Money of that. And there are some other nuances and differences, and we'll discuss those as we go along. Okay. We'll do a super quick market overview. If you do not go to the Trading ETFs Trader Talks class on Friday mornings, I suggest that you add that to your schedule. It is one of only 2 webcasts in our regular webcast week that is not archived. There were 500 people or over that there this morning. And, if you're not there, you're missing out. So Trader Talks with Kevin Hinks and James Boyd on Friday morning. So I'll do a very quick market overview, but I suggest that you check out Trader Talks first thing when the market opens. We're going to place a bunch of new example trades, and then we don't have a lot to manage because we're out of most of our events. Now, people are asking when I'm going to be here and when I'm going to be gone, because I do go to some live events. This Dallas event is now past, but do I have the next one? No. But the next 2 events, this is in the Seattle area next weekend, and I will be there. That is a 2-day, and as is Sacramento the following weekend. These are 2-day events. The first day is getting started with technical analysis. The second day is getting started with options. And this is really how I got introduced to the world of trading, was at a live event. They are free to attend. So, but I would throw your hat in the ring and register if you intend to go, because we do have capacity issues, and often, these get maxed out. And then, can you get a spot or not? But yeah, I'd highly recommend them, especially if you want to reinforce some of the basics. This is a great thing to attend. Okay, so that's that. The premise for this class, if you're new, feel free to type a greeting into the chat so that we can welcome you. We've got Brett Crowther with us in the chat today, and he brings a wealth of experience. So if you've got questions, fire away between Brett and I. Hopefully we'll be able to answer those for you. Yes, and I will be at these next two events. So we are managing, we started with the first class of the year with a $25,000 account. Our max position size is 5,000. And you may be saying like, whoa, Nellie, that is really high. That's 20% of our starting account value. And it is high, but we wanted to be able to do example trades with stock. We wanted to be able to do example trades with strategies like a buy, right, cover, call, where we're buying 100 shares. If we had a $100,000 account, our max position size might still be 5,000. Which is 5% of the account value as opposed to 20, but that's our rationale for having chosen that. And then our max risk per trade is 500. Okay. And even if, we have gains in our account, our max risk per trade is not likely to change because that's 2%. And if you had $1 million account, you might say, well, I'm not willing to risk 2%. You might be willing to risk half of 1% or a third of 1%, or you may pick a number, like I don't want to risk more than $2,000 or whatever that number is. But our focus is on the short to intermediate term time frame in this class. We're in the moving business, not the storage business, to steal a line that I kind of love from Kevin Hinks. And we trade, depending on what's going on in the market, both bullish and bearish strategies. I mean, there have been years where the majority of what we've done is bearish. That hasn't been recently. Why not? Well, because the market's been bullish. So we're kind of trying to go with the flow of the overall market and then find stocks, as example trades that are in sectors that are strong and stocks that have momentum. And then we want to get in because, as retail traders, we can be small, nimble, and quick. Okay, so how are things going so far? Well, and if you didn't, you weren't with the class at the beginning of the year where we talked about, setting goals and the importance of that, we kind of said, well, we started with 25,000 and our goal was over the course of the year, like some people, their goal might be to generate some income. Like maybe they have a large account and they have a lot of their stocks that are more like on the storage side of the business. They're more longer term investments, but maybe you're going to take a small portion of your account and try and generate some income with it. And so we said, okay, well, what if our goal was to generate $200 a week in income? Like that's a pretty aggressive goal. Like that's not quite 1% a week. Like $250 a week would be 1% a week. But so far in this example account, we're up over 3,000. And we've missed 3. So Kelly, Brett will post a link to the playlist for this class, and it was the first class in January. Yeah, so if you missed that, you'll want to go back and watch that. So our goal is kind of to generate 200 a week. And so our goal would be, to be up about 800 and we're up over 3,000. So does that mean we go out on a spending spree if that was our goal? Well, no, maybe we want to tuck that away because there could be months where we're down. Like where, we're going, okay, we haven't made a dime over the last month. And that can happen. And we've seen that happen, or where we end up losing money, and so having that buffer set aside, it could be potentially helpful. So that's kind of our thought process and kind of why we're looking at being in the moving business as opposed to the storage business. So having said that, a super quick overview. S&P 500 within a stone's throw of all-time highs, kind of came back and it didn't even quite flirt with the 100-day moving average and is moving to the upside again. If we want to take a look at, what's happened in the last 12 months, if we show price as a percentage, we're up 13% in the last 12 months. And in fact, we had a little bit of a pullback. I think we closed the year 2025 up about 18%. And I think the NASDAQ was up over 20. And it's setting up a bit of a pennant pattern here, and it's still within that. But, we're up 0.5%, and we're still early in the trading day. And again, a pretty strong uptrend. When we look at our small caps, well, these have been just absolutely crushing it, hitting a new all-time high yesterday. And today pulling back a little bit. Some might say, oh, could this be setting up a bull flag? In the last 12 months, 16%. Like, that is not too shabby, my friends. How about the VIX? It's sitting back around 15 after a little spike to the upside. And, this is at, kind of the low to mid end of the range of where it's been trading. Okay. So, not bad. And I posted something on X. So if you, aren't following me on X, I invite you to do that at Barbara Armstrong CS. You'll want to follow Brett as well at Brett Crowther CS. And it was just a little video on how to get a quick overview of the market. And if you missed that, I encourage you to watch that. Okay, so we're going to do some review and then place some trades. And we're going to kind of go back and forth. But if we let's look at the last 2 weeks. So one of the things that we had done was a call on AU. So I guess we got to go back 25 days. So I was on vacation. I went to Maui for a week. We've done 2 trades here where we bought a call and then we put a 1 ATR target. So we said, hey, if this moves about the amount that this stock moves in an average day. So let's come and look at AU. And I've got the ATR here. Now, if you are not familiar with this study, you can come to Edit Studies and here's ATR. It's right at the top, or you can start typing it in. But, I've already added this. So you just add, apply, okay. And what this is saying is over the last 14 days, on average, this stock has moved about, $4.08. Or $4.07 a day. Okay. So actually, if I hover over today's candle, that 1 ATR 408. Now I used 407. I've already done kind of the math ahead, just so that we can get kind of more in. But we placed a trade here and it hit our target the next day. So this was on the 6th and 7th, and then we did another one on the 9th. We said, hey, if this works out well, wash, rinse, repeat, we'll do it again. And so we did another one here, and it hit our target here. And so we were out. And how did that one work out? Well, when we come to the monitor tab and looked at it, we bought this call for 520. So how much were we risking? 520. And so we bought it on the Friday, and then we sold it on the Monday because we'd already put our target in. And so our net on that one, if we just take our 750 that we made and we subtract the 520, we made $2.35 a share. We did 1 contract. Why did we only do 1 contract? Well, remember, we don't want to risk more than about $500 per trade. And even though we had put an exit in, if it had gapped down, we could have lost all 520. So we made $235. We were risking 520. And so our return on risk on that was 45%. Which is, not too shabby, because, remember, if our goal was to make $200 in a week, ding, 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 we just made it. Okay. With that one. So that one worked out to our advantage. Okay. So now when we look at the chart today, So this begs the question, well, Barb, why are we doing this one ATR thing? Like, why not just buy a call for the longer term? We could do that, but what we're trying to do is like small wins because we, are pretending that we have this short-term goal. Yeah. So Ricebird, you're right. It wasn't 3 days. It wasn't one trading day, but Saturday and Sunday, the markets are closed. So it's come up, created another little bit of a bull flag. And if we look at this as the low day, even though it finished higher, we have an entry here today. So could we do this again? And I say, why not? So again, if we place this trade today, how would we kind of do the math for this? So I'm going to bring up a scratch pad. Guess I can just wipe all that out. Okay, so for AU, this is our one ATR example. And our target on this is going to be today's high, which is 104.52. It's gone up since I did my math, plus 407. But I've got some mathematicians in the crowd here today, so that looks like 108.59 is our target. Okay, and then our exit is going to be today's low, 102.20, minus 407. And so that would be 98.13. And this has a very tightly managed, this is a very tightly managed trading strategy. And by that, what do I mean? I mean that if it doesn't hit our target on Monday, then we're going to go in and snug up the stop to, and this is over $100, so to $1 below Monday's low. And so I'm going to edit this because our new target on this is 108.59. And so this is going to be our new 108, our target, which is just above this previous high. And how do we place that trade? We're going to come to the trade tab and we are going to look at March. Now, why March? Because this has only 28 days to expiration and time decay starts to become an issue. So if I look at this, I'm losing, here's the one we can afford because it's under $500. We're losing 11 cents a day. Where if I look at March, I have to go out a little further. Well, actually, these aren't really viable because the bid-ask spread is too high. So our theta is less, but the bid-ask spread is too wide. So we're just going to have to, what we're going to have to do is manage this tightly because theta is like, that's costing us 10% a day. Now, one of our guidelines is, does this trade more than 1 million shares a day? Yes. Does this have lots of volume on the options? And we look at this, yes. And do we have a tight bid-ask spread? Yeah, it's 10% or less. So if we're okay with all of that, we're going to come to buy. And we're buying a single, and then we're coming to single order, first trigger sequence, right click, opposite order. We're going to make this a market order that's good till canceled. And then we're going to bring up our conditional menu and put these numbers in. So we want to get out of this if and or when AU goes above 108.59 or if it goes below 98.13. Save. Confirm and send. So above 108.59, it's currently at 104, so that number makes sense, or below 98.13 or below 98.13, how much could we lose? 460. Now, I'm going to do a second trade on AU. Why? We're going to do one with stock and we're going to put in the same target. So why are we doing a stock trade? You know, as an example to compare this to. And also this is a 1 ATR target. So these are just notes from us to us, you know, so that we understand kind of what we're doing and why we're doing it. Well, one, most of our money is sitting in cash, you know, because most of the trades hit their targets. We don't really have a lot of trades on. So we have $27,000 sitting there on the sidelines doing kind of ding qua qua. So could we take 5,000 and buy some stock? Now, and if we did that, where might we put a stop? Well, some might say, well, it's been using this 30-day moving average as a support level. So how about we use the 30-day moving average? And right now, the 30-day moving average is about, you know, 91.47. So if we say, okay, 91.47 times, if we went even 2% below that, 89.64 would be our support, our stop. And you might say, like, geez, I don't want to lose that much per share, but we're giving it enough room to breathe without enough rope to hang ourselves. But remember, how much can we risk per share or risk per trade? 500. So if we said, okay, if we can risk 500, and on this, if it's at 89.65, let's call it 90, we're risking, well, we are risking $15 a share, approximately. So how many shares could we buy? We could buy 33. And if we bought 33, are we over 5,000? No. But that's why, you know, we're giving it some room. Now, can we snug up the stop? So we're going to have the same target. You know, you might say, is it worth getting in? It's only like, we'd only make $5 a share, you know, or 104 to 108. Okay, so we'd make $4 a share, but it's $100 stock. Like, that's still close to 4%. You know, like, that's not too shabby. And you know, we're not expecting that to do that in a year. We're expecting to do that, you know, the goal is to do that in a few days. You know, so again, like, if we're in the moving business as opposed to the storage business, could we just do that? Yeah. So we're going to come into the trade tab and we're going to buy. And actually, you know what? Here, we are going to buy custom with an OCO bracket because we're going to put in a target. And our target on this, 108.59. So 108.59. Now, if it goes up way past that, are we going to be bummed? No, because, like, we just want to make a little bit, right? That's our goal. And 98.13. 89.64. What's our 89.64 is our exit. Now, some might say, hey, we're risking 15 to make like 4. That's a terribly bad deal. And if that's your thought on that, then one wouldn't place the trade. And I totally would understand that. But what we're trying to do in putting a stop that far away is avoid getting nicked out and then have it go up through our target. So we're risking 15 to make just under 4. So we're going to put that in our stock with targets and we're going to compare it to the 1 ATR. Now, what advantage does this have? Well, the advantage it has is that, you know, we don't have to worry about time decay. You know, so yeah. Yeah, I don't know where that expression comes from, guys. I have a lot of crazy expressions. Part of being French Canadian. Okay, so that's AU. So we've reviewed AU and we've placed 2 new trades on AU. So let's come and let's look at Newmont. So this is a gold stock. And, you know, when we look at gold has been doing, you know, it has been really strong. And if we look at Newmont, if you're not familiar with them, you know, it's in the material sector. And what does it do? Like it mines, it's a gold mining company, and also looks for copper, silver, zinc, lead, other metals, you know, international, you know, based in Denver, founded in 1916. It's been around a long time. So if we come to the chart on Newmont, so here was another one where, you know, we had a 1 ATR target, we did a wash, rinse, repeat, and then we did another one where we bought on the 9th and it hit our target. So we bought on Friday before I left, and on Monday it hit the target. And so how did that one turn out? Well, it you know, it was a win. And we also had bought the stock earlier and had kind of done a similar type of trade, or it might have been a swing trade. So again, short, we were just looking for a short-term win. We had bought 48 shares. I've already reviewed that. So this one, you know, we got in for 440. How much could we have lost? We could have lost all $440, right? We did one contract. We got out for $6, so we made $1.60. Remember, our goal was to make 200 a week. So, you know, that puts a good dent in that goal if, you know, given that we had that success. And so what was our return on risk on this? Because we were risking 440. That was 36%. And again, you know, this was one trading day, 3 calendar days. So we call that a base hit. You know, we made $160. Now there were transaction fees, didn't take those into account. It's $65, 65 cents of the transaction fee to buy the call, and then 65 cents to close it out. So we'd have to take, you know, $1.30 off that, you know, a little less than 1%. Okay. And I don't believe that paper money takes the transaction fees into account. Okay. Yeah, somebody's asking what 1 ATR is. I did cover that earlier. It means average true range. It's the amount the stock moves in an average day over the last 14 days. And so that was our target, very short-term target. Now, you know, had we been together yesterday, we would have said, well, this is a bullish engulfing pattern, does not require confirmation. We could have placed the trade yesterday. We're hitting a new all-time high. So, you know, might you just say like, hey, like this is the horse is out of the barn. Well, we could have said that back here. We could have said that here. We could have said it here. We could have said it here. You know, like, so could we do this, the same kind of thing again? And the answer is we could. Might it work out? Yes. Might it not? Well, it might not. Like some might say, well, hey, this could be a hanging man, you know, because it is at a new all-time high. So this could pull back. And so, you know, if we want to, if we're overall bullish, you know, we still have 24,000 sitting in the account. Could we say, well, I see this as a support level, this kind of 111.50 level. If I put a stop 3% below that, 111.50 times 0.97, could I do that, you know, 108, put a stop at 108? $15, and could we buy 500,000 or 5,000 worth of stock? And why might we do that instead of doing an option? Well, because it gives us, we don't have to worry so much about time. Like if we're in it for 3 or 4 weeks, what do we care? And so if it does pull back, you know, then if it doesn't pull back below here, we stay in the trade and we don't have to worry about time going tick, 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 tick. You know, we've got time, you know, when we do a stock trade. So if we said, okay, if our stop is at 108 and we're buying in at 123, 123.14 minus 108.15. How many shares could we buy? We could buy 15 shares. It's not a lot, is it? You know, and some might say, well, I don't know why you're putting your stop so low. It's because we want the risk of being stopped out to be lower. You might say, well, why not? I'm just going to put my circle here and then get rid of it and do a line. You know, why not put your stop below there? You could look at that as a support level. We could. And so maybe we make it 115, but if we come to the trade tab and we say, okay, in the next 28 days, what are the probabilities of it at least coming? This is probability of touching. What's the probability of it at least coming and giving it a kiss? 65%. You know, what are the odds of it coming down to 108, 38? Like significantly lower. You know, like the probability of it being in, of it, you know, some will look at delta and say, well, the delta is 16. Like, so we have a less than a 20% probability of it closing below. But when you put a stop loss in place, it's not whether it's there on February 28th. It's like, what are the odds that it came down and touched sometime between now and then? That's the number that's more significant. So we want to minimize the risk of being stopped out, you know, nicked out on a wick is how I like to say it. Okay. So 13 shares, that's now if it goes up, could we place another trade? You know, and with Newmont, you know, we could do, you know, a 1 ATR target again, or we could say, hey, we've got a bit of a, you know, bull flag happening here. You know, where might this come to? But if we stick with that, you know, 1 ATR idea, we'd be adding 366 to today's high, and our target would be 127.85. And so again, this may seem like an asymmetrical amount of risk to reward. And you know, I respect those that say, nah, I don't want to do that. But what I'm trying to convey is the idea that, you know, sometimes with these stocks, you know, if the stop is too tight, then we just set ourselves up to lock in a loss. Okay, so Newmont 127.85. And our stop, Newmont 108.15. 108.15, and we can do 15 shares. And then you'll see when I type in the 15 and click enter, so we're sitting at 123, at 123.23. Our target is about, you know, 450 higher. Our stop is at 108. We want this to be 108.15. Now, having said this, if, let's say this came down here and then bounced, could we move this stop up then to 3% below here? Absolutely. Okay. Yeah, somebody's saying we're just depositing money into somebody else's account, you know, when we set our stops too tight. Now, we also did trades on STX and AMD. So here's STX. We had a swing target in place. We placed the trade here when it was bouncing off the 30-day moving average. And we did both a long call vertical and we had a swing target. And both of those worked out nicely. And just so you can see, so here was our long call vertical. We got in for 470, out for 840. Oh, and then we did a stock purchase with 17 shares at $297, and then we sold them at $332. And so on the stock, we made almost $35 a share. So when we look at the stock, we made $34.67 a share, and there are no transaction fees on the stock, and we had 17 shares. So that came out to $589. Is that right? 34.67 times 17. Yeah, 589.39. So, I like to use baseball analogies. My son-in-law has got me following baseball. But like, remember, our goal is 200 a week. That's like 3 weeks worth. So we call that like a double or a triple, like happy camper, squared on that. But we tied up $5,000 worth of our income, right? Now, how about this one? How much income, like how much of our account did we tie up with this one? $470. And how much could we have lost? $470. And we ended up, if you take 840 and subtract 470 on that one, we made $370. So we made less, but we were risking way less. So our return on investment on the stock was 11.6%, which is, not too shabby given we were in it for, about 7 days. With this one, our return, and it must have gapped up or something, or maybe it was a paper money fill, because we made 370 on 470. So that was a 78% return on our risk. And our goal with these is 50%, with long call verticals. So we definitely overachieved on that. But that's what happened on that. So let me erase that. And so when we come, this is pulling back today, and we're just, on the cusp of earnings. And so we will not do a wash, rinse, repeat on STX. Instead, let's come and look at, let's look at J&J. Oh, and now it's down a little bit, but we've had a really nice uptrend with this, have we not? And this hit a new all-time high. So we'll come back and look at this again Monday, but it's bouncing off that 30-day moving average. And could we, take a look at the Fibonacci's and place a target on this? And the answer is, well, these are example trades. I mean, we can do whatever we like. So we'll come back and look at that one Monday. Let's look at AMAT. Okay, so here's another stock, year to date, it's up 22%, and we're still in January, for crying out loud. So it's sitting at 320, and we're sitting like right at a support level. So these are these kind of, some might say delicious opportunities because we're really close to support. So like if we even just did a swing target here at, say, the previous high, which was yesterday at 333, we could be up $12 a share. And what is 12 divided by 320? That's almost 4%. It's 3.7%. And then where might you put a stop? Well, you might say, well, yesterday the low was, or today the low is 311.07. So, and I'm on AMAT. 311.07. So if we went 2% below that, as an example, times 0.98, our stop would be at 304.85. And our target would be 333.03. And so how much are we risking? Let's call it 305. We're risking $15 a share But now the goal, if we make this, 333 is 13. So it's much closer to a 1-to-1. And again, this is a really expensive stock. So some people might say, well, you only have a $25,000 account, so you can't really trade that, but we don't have to buy 100 shares. We could say, we're going to buy 15 shares. Yeah. So, and this is, a hammer at a support level that this has been lurking at for a week. Now, could we do a short put vertical? And we could, but why might we not? Well, because we've got earnings coming up on the 12th. So we want to be in and out before earnings because things can gap up and they can gap down on earnings. Earnings is a time of more volatility. And so if we look at, again, buying custom with our OCO bracket, and our target was 333. And our stop is going to be at 304.85. 304.85. 04.85. Good till canceled. And how many shares? 15. Okay. Okay, so here the goal is to make 12.57 a share. We're risking 15.58. Would we rather it be flipped? Yeah. Yeah, and somebody's saying, yeah, I like the look of AMAT as a nice ticker, but we'll wait till after earnings. And I respect that. Our goal is to get in and try and make a little money before earnings. Yeah. And when earnings is coming up, the price of the options get pumped up. So that might be why an investor might choose to do a trade using stock instead of buying the option, because the options are going to be more expensive. And like if we this is an expensive stock, so they're going to be more expensive just to begin with. Like these are $17. Like this is not in our snack bracket. We'd have to go like way out of the money, like way, way, way out of the money. And can you still make money potentially when you're way out of the money? Well, sure. But this is something to take into consideration. And your volatility, your implied volatility here is high because earnings is coming up, and might be just because AMAT, it is a more expensive stock. Like if you we can come down and look at the sizzle. We're out of time today. But I think we've covered a lot. We've reviewed all of the trades except AMD, and AMD, we had done a short put vertical. Mike Fairborn put that on when I was away, and that hit its 80% gain target. So we didn't get to review that one, but we did review Newmont, STX, and AU. And then, what new trades did we put on? Well, let's come out here. We put two new trades on AU. We put a new trade, a stock trade on Newmont Mines, and one on Applied Materials. And so we did 3 stock trades today, which is unusual for us. And then we bought the call on AU. So we did do 4 new example trades, and then we get to meet again on Monday. So guys, that's a wrap for today. For those of you in the snow zone, I am a wee bit envious, just in that I'm a skier and we are having a very non-snowy winter here in the Salt Lake City area. So, but stay safe, everyone. Stay warm. Get out and hug someone you love if you can wade through the snow in your driveway. And I will look forward to seeing all of you on Monday for trading a smaller account. There's lots of great content still to come today, so stay tuned for that. If you haven't already subscribed to this channel, Please hit the subscribe button in the bottom right corner. If you haven't already hit the like button, I'd appreciate it if you do that, if you found this helpful, because it helps move this up in the algorithms on YouTube so more people can find this content. And then don't forget to follow Brett and I in the land of X, Brett Crowther CS and Barb Armstrong CS. Once I get this webcast wrapped up, I'll be posting some charts on X. And so I hope that you'll check those out. So guys, have an awesome weekend and we'll see you Monday. Take care, everyone. Bye for now.